What is up, everybody, and welcome back to episode 9 of the Day Trading Bootcamp. In today's video, we're finally getting off the high time frame and we're scaling down to macro time frames. That is the topic of this video, and what that is going to focus on is certain high volume areas of price where you see a lot of movements and it's like an optimal time to enter a trade, basically. And I'm only going to be talking about New York session time frame macros today and how I use them and when I find them to be most important, but I will also cover when the other macro timeframes are for the other sessions. This is an ICT confluence. He invented these, and they make a lot of sense if you think about them. This is basically a no-yap ICT video, so if you've seen an ICT series before, you know all about these already. That being said, before I get into this, you all know I have the simplest, best inversion model in the space. I trade the system. If you want to learn for yourself, head down to the description, join my Discord. I have tons of free PDFs on my model and a bunch of free resources in there outside of this bootcamp. I live trade my model every single day in there, and no reason you shouldn't join. I hope to see you in the Discord, but let's get right into this episode. All right, so macro time windows. What are they? When are they? Let's get right into it. So what is a macro time window? And that is just an area of time when you see a lot of volatility in the market. Now, that could be for a few reasons. Not all of them are the same, but that is when you see a lot of orders coming to the market. Now, me trading inversions and trading ICT concepts, I'm looking to catch a decent-sized move to a liquidity pool or off of a liquidity pool. So using that volume and using those orders as momentum for my trades are really important. That's why it's very crucial to have a macro time frame line up with when you're entering a position. You don't have to wait, but it's always good to be entering a position in a macro time window. It's like an added confluence. Anyways, let's get right into it. So there are two set parts of New York session. Well, technically three, but you have your AM session, you have your PM session. We're going to forget about lunch for now. And in the AM session, there is two important macro time frames to worry about, and then the lunch macro is, we'll call that something random. So I'm not going to read out when all of these are. You can take a screenshot if you want, write it down, but they are all very important. But what I'm focusing on today is the AM session macro, because that is when I trade, and those are the macros that are arguably the most important for the entire trading day. All right, so the AM macros, you have two of them. You have the 8:50 to 9:10 AM macro, and what that is that is when you see a lot of volume, because that is when we open up the hourly candle at 9 a.m. and that is when we start looking to get out of pre-market into the live market, and any banks and institutions that are going to be filling trades pre-market are probably going to be filled within this 8:50 to 9:10 a.m. macro. Number two is the 9:50 to 10:10 a.m. macro. This is my favorite macro time frame. I enter probably, no exaggeration, 80% of my trades in this macro. This is vital because at 10 a.m., what is happening is a 4-hour candle is opening up, and I'm going to demonstrate this on the charts for you so you can see why this is important. But what you're looking for is manipulation in this time window, and because you are looking for manipulation, you are looking to see a wick get put in on a 4-hour candle, and that wick almost always taps into an area of liquidity. Stay with me now. So because this 4-hour candle is opening up, you are looking to catch the move of the 4-hour candle in your trade. So that is why I'm always entering in that time frame, is because I'm looking to see my trade play out from anywhere between 9:50 and 10:10 a.m. all the way throughout the rest of the New York session. So that is when I'm entering. Lunch macros and PM macros, not relevant to my strategy. I'm not going to talk about them, but same things apply there. All right, that was a little bit of an overview of everything about them, but I'm going to get more into detail on all these talking points that I brought up. So what is happening in these macro timeframes is New York AM specifically. That's when obviously all the money and all the volume for that day enters the market is New York AM. So in pre-market, they're looking to set up their positions for that day. So the 8:50 to 9:10 macro is when liquidity is being put in to kind of head towards a draw on liquidity to manipulate you out of the market so institutions can get their big orders in and then send price in the opposite direction throughout the rest of the day. That was a lot, I know. So think about this. Usually just in pre-market or just after market opens in the 9:50 to 9:10 or 10:10 macro, you see a big liquidity sweep, because obviously we don't enter a trade without a liquidity sweep. So you're going to see a big liquidity sweep in this time frame. Why is there a liquidity sweep in this time frame? Well, institutional orders rest somewhere. They want to get filled out, and that is almost like manipulating someone out of the market who would want a long or short to that draw on liquidity, manipulate them out, and then reverse. And that is where you see your daily high or low get put in. So obviously you're always going to have a daily high or low. But right at New York AM, you almost always will see price hit a liquidity sweep, manipulation, in a specific time window, and then send price in the opposite direction for the rest of the day. So the rest of the day is delivery or consolidation after we made the move in that session. So you got to consider, we need to hit a point for us to make the move for the rest of the day. So manipulation, delivery. Manipulation, delivery. That's what happens in these time frames, is either manipulation or the beginning of the delivery. Don't overcomplicate this. Now, let's look at detail when these times actually are. So 8:50 to 9:10, 9:50 to 10:10. One thing you'll notice about both of these time windows is that is a flip from either 8 o'clock to 9 o'clock, 9 o'clock to 10 o'clock. So your clock would change 9 to 10, 8 to 9, whatever. But when this happens, when you go from 8:59 to 9 a.m., you start a new 1 hour candle. Now keep that in the back of your mind for now. 9:50 to 10:10, you start a new 1 hour candle, of course, because you go to a new hour. But you also open up a new 4 hour candle, which is really key here. Now this is key because when you see candles on the charts, they're not just rectangles like this, rectangles like this. As you all know, these candles always have wicks in them. So they have their top and their bottom wick. They always do, no matter what. It's very rare you see a candle without a wick. So knowing these candles are going to have wicks, that means obviously the bottom and top of the wick is the lowest point and the highest point a candle reached throughout that window of time. Now let's say right here, this is the 8:50 to 9:10 candle. It's on the 1 hour chart. At some point in time when this candle opened, if this was a bullish candle, it traded lower and moved higher. So at some point, this bottom had to be put in. So at 8:50 to 9:10, considering over an entire hour of time this candle moved up, you'd have to consider that pretty early on in this candle's lifespan, you put in the bottom wick. You put in the manipulation lower before making a bullish candle higher. So that's why these wicks in the beginning of these candles opening are very high prominent times for manipulation. You have to put in the wick of the 4 hour candle before delivering for the rest of the 4 hour. You have to put in the wick of the 1 hour candle before delivering for the rest of the 1 hour candle. Think about what I just was saying earlier. Manipulation, delivery. Very important. Now, one more thing to consider. You guys always know I say higher time frame holds higher power. So the 4 hour candle opening, of course, is going to be a bigger candle usually than the 1 hour candle. So you have to consider bigger manipulation, bigger delivery, bigger trade. You're looking to enter in the manipulation, finding a sign that we're going to deliver, and then flip to the downside for the delivery, and that is where your trade will play out and hit take profit. So you're looking for manipulation in these time frame windows to enter the trade because you know most people are getting manipulated out of the market, catch an entry for the delivery. Manipulation, delivery. Higher time frame holds higher power. Macro time frames. There you go. All right, now let's look specifically at the 9:50 to 10:10 macro, which is obviously the more important one, the bigger one, because higher time frame holds higher power. Now, for this 10 a.m. open on the 4 hour chart, you are looking for an open low high close, OLHC, or an open high low close, OHLC. Now, like I said, it's 10 a.m. in the morning. You know that 4 hour candle just opened up. You all know the wicks are the manipulation point. So you manipulate higher or lower, depending on whatever it may be, and then you deliver for the rest of the candle, making it a bullish or a bearish candle. Manipulation, delivery, which would go down at 10 a.m. Now, that being said, at 10 a.m., you normally see reversals. If not reversals, continuations. You are looking for 10 a.m. to 10 a.m. opens right here. Trade lower for a little bit and then deliver for the rest of the 4 hour candle. So that would be an open, low, high close over the course of 4 hours. Or 10 a.m. opens right here, trades higher, puts in that wick of the 4 hour candle, manipulates orders, low close, trades lower and delivers throughout the rest of the 4 hour. In this time frame of manipulation, you know manipulation equals liquidity sweep. You want to see us sweep or tap some sort of high time frame, high or low, liquidity pool, fair value gap, whatever it may be. You want to see us trade into a higher time frame area of liquidity. This is where the manipulation, the orders, all this stuff comes full circle. You line up time frames, you line up macros, you line up candle opening and closing with your liquidity, with your high and low, with your fair value gaps, and you look for confluences to predict where price will go throughout the remainder of New York session, the trading session you will be trading. How to predict at specific times price is looking to reverse off of. All right, here's a random area of price that I picked out at 9 a.m. on the hourly chart. So we have a few things that we're looking at. We're looking at these lows, these highs. We're kind of range bound. This is all we really got right now. No fair value gaps, lows and highs. Keep it simple for now. So let me drop time frames down. Okay, I let price play out until 9:50, and I'm on the 5-minute time frame just to make it easy. So we are looking for our 9:50 to 10:10 macro to open up, see some sort of manipulation, and then delivery higher or lower depending on where we manipulate. So you will notice if I let two candles play out, let's see what happens. Here's 10 a.m. open. We're starting to manipulate lower, And we are, of course, as I just mentioned, trading into some areas of liquidity. We have 2 fair value gaps stacked up here. 3rd fair value gap down here. Just we know we have a lot of liquidity in here, 5-minute fair value gaps. We're going to see manipulation and then delivery for the rest of the 4-hour candle. Okay, just let it play out, manipulate lower, and it looks like we will trade higher for the rest of the 4-hour candle. You see, this candle will last until 2 o'clock. And there we go. We had marked out the 2 areas of liquidity. We had the high and the low below that we were looking at coming in the morning. 10 a.m. manipulated lower, and then throughout the rest of the 4-hour candle, almost down to the last candle, we hit the next bull on liquidity. Manipulation, delivery. Where are we going to manipulate to? What could hold? What could reject us? Where could we deliver? 10 a.m. open, low, high, close. This isn't anything that's crazy. This isn't rocket science. This is just everything you guys know, and then add in times. What time does it say at the bottom of your chart? That's all you have to check. That's all you have to compare with. You're just adding in areas where volume floods into the market to your high time frame analysis. Go onto the charts, back test this, compare it, analyze it for yourself, and see if it works and see if you like it. Can't encourage it enough. Try it for yourself. Thanks for tuning into this episode of the Bootcamp. We're almost to the end. We're getting to the nitty gritty. Next video will be on conditions and 5 and 15-minute conditions, which, as you saw, we manipulated into a 5-minute fair value gap. That was a condition. So we will learn about what conditions are in play for us to reject out of or displace through to determine where we're going to go for the session. As you know, easiest IFEG strategy in the space. You're learning the confluences to build it. Link in description. Free Discord, free live trading, free resources. Have a good day.